All right, here we are. I'm with my buddy Mo. If you can see, he's at the World Series of Poker. Everybody behind him is just being really still,
They're
right?
playing.
Mo's like the only
They're
one
in the
that's
zone.
they're in the zone. They got the real poker face going on, right?
Uh-huh.
All right, so Mo had asked me to do a little video here and show him how I'm trading SPX. And so what I'm going to do is I'm going to show you kind of the trade that I put on today. I'll kind of tell you in the beginning, I like to put these trades on in the morning, like 8:30. It opens by 9 o'clock. The reason is we've kind of shown that you can get about 20% more premium in the morning. The longer you wait, premium starts to erode. So I'm going to kind of share kind of the two thought leaders on this. Tammy Chambliss on Facebook has become kind of the guru of it, and it's typically called 0 days to expiration. If you were to trade strangles in it, it would take a ton of capital. We tend to put it on as an iron condor, so it's defined risk, and the reason is you can get, it's like efficient use of capital. Doesn't use nearly as much buying power. So I'm going to share my screen with you now and kind of show you kind of if I was to put on a trade right now. Tell me as soon as you see my screen. Can you see it?
Yeah, I can see it.
Okay. So if I was trading SPX and if I was trading it right now, you'd look for the 0 days, which means it expires at the end of the today. I probably wouldn't put one on in real life at 1:13 that expires in 2 hours, but for the sake of argument, I'm going to show you how I would select the prices, and then I'll show you the one that I put on today. I actually got stopped out on one, and we'll kind of show you how. So if I scroll down here, I'm looking at Delta. And I'm looking at the Thinkorswim platform. And if I'm looking for around less than 10, so if I looked at the 9 delta here on the puts and I clicked on sell that, and I'm usually looking at about 50 points wide. So if I go 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, and I buy this one. So, you know, it's trading at about 50 cents. So if I sold, if I could afford 10 contracts, it takes about $5 grand in buying power per contract. But if I had, if I had $50,000 of buying power, you know, I could put this guy on and collect $530, but it takes me almost $50,000 in buying power. If a person's got a smaller account, you know, you could trade, you know, one contract and you could collect $53. So it's a small amount, but it's a very high probability of profit. I think statistically you get stopped out at about 20% of the time. I did get stopped down on one today. So that's kind of how you would put on the puts. And then what I would do is I put them on separately. I do also one on the calls. So I do basically the same thing. I'm not showing one that's like around an 8 delta right now. There's one here that it's 11. So if I clicked on sell there, usually on the calls, you don't have to go as deep. So 5, 10, 15, 20, 25, I could probably buy this one for a nickel. So one isn't going to take as much buying power. It'd take 24,000 in buying power for 10 contracts. And I could collect, you know, $480 if I did 10 contracts. So I know I talked fast in that. Let me see if we're even. I'm not even sure if I even started. Yeah, I did. So let me go back and I'll show you the actual trades that I put on today. I got stopped out in one, but I'm still on this one. I didn't get stopped out. So I'm up $1,275 today in SPX. Now what I did is I set up a 3-time credit receipt stop loss. So if I collected 90 cents, my stop loss trigger would be at $2.70. And then the top amount I would sell it for, I usually give like a 30-cent range. So if it triggers at 270, the top amount that I stop out on would be $3. If you collect $1, it would be $3 here. It'd be $3.30 here.
So I'm new to the stop loss. I haven't really used it. Can you show how you do that?
Let me do a cancel replace on this guy. This is, you can kind of see how this is set up. So you click over here and you select stop limit.
Mm-hmm.
The bottom number is your trigger.
Okay.
The top number is the top amount you're willing to close it for. Now, the reason I choose a 30-cent range is when SPX is moving real fast, there's the possibility it blows through your stop loss and never executes. And the tighter you set that stop loss, the more dangerous it is that that happens to you. Personally, it's my experience that a 30-cent range is more than enough not to blow through my stop loss. But I still can't guarantee it. Does that make sense? It's kind of
yeah.
So
I mean, if I was to make it, let's say 50 cents, you know, would that cause any like higher losses in my term? I
if you
know.
put a 50-cent range,
Uh-huh.
The range just guarantees that you're going to get out. The tighter the range, the more risk you take that it blows through it.
Mm-hmm.
The bigger you set your stop loss, your higher probability of profit, but your greater your loss is if it does go against you. So the reason we're choosing a 3-time is Tammy has done back testing on it and has decided that that's your optimal strategy. I didn't personally do the back testing, but I trust she knows what she's doing, and I trust her data.
Yeah, I mean, I know TD Ameritrade doesn't always try to get you the best price. Not like Charles Schwab. Schwab, you know.
Well, hopefully some of that will change because, and I'm going to stop the share so I can look at you, but hopefully some of that will change because they merged with Schwab, right? So you kind of, at some point. There is some slippage on SPX. What slippage is, you know, I'm always trying to do what's called cost, forget there's a word for it, but it's kind of like eBay. You know, you set it at 5 cents higher, and I'm kind of watching the chart, and it's always better to sell your puts when SPX is taking a dip, and it's always better to sell your calls when SPX is, you know, going up. So you're kind of looking at red and green and trying to time your sell, because a lot of this can differ depending on whether or not you get stopped out on what kind of fill you got.
Yeah, I was looking at some of these YouTube videos actually, and how these, you know, day traders executing their orders with one click, you know.
Yeah.
I think that comes in very handy. There's been times, you know, where by the time I select, get me this contract, that price already jumped up.
Right. Well, just to kind of give you an idea, here's in one account where I traded 10 contracts and I didn't get stopped out at all. So I'm up 1275. Here's another account, in just a matter of a few minute difference and slightly different fills. I did get stopped out. I'm down 475 in that one. And another one is down 425 in that one. So just a matter of just slightly different fills can make a pretty huge difference. And sometimes it's luck. I mean, if you're better at reading charts than I am, maybe you could time it slightly different. Here's another one that I did. But the thing is, if you get stopped out, it's 3 times the credit received. So if you collected $1 and you're getting stomped out at 3, you've only lost 2. So it only takes 2 more winning trades to make up for it.
So, but on the SPX, let's say everything's going good and you don't get stopped out until lunchtime or whatever. Do you attempt that trade again, or you just wait for next?
I'm putting the stop loss only on the naked puts and the naked calls. So I still have that long put if it gets stopped out on the short put. So what I'm doing is I'm immediately turning around and doing another one on the short side, same day. But I'm keeping that long call, right, to limit my losses. And that essentially, that nickel that you're paying for the long put or the long call, all it does is it lowers the amount of buying power that it's taking. Because I don't see how anybody could afford to put them on naked just because of how much buying power it takes. It's just, it's more about efficient use of capital. Because, you know, SPX is trading at $3,234 a share. So it's a big underlying. So you don't want to get hurt too bad, right?
Well, people who trade Amazon on the same ballpark, right?
Maybe you do. You do want to get hurt bad. You're a masochist, man. Hurt me. All right. Most people don't want to get hurt that bad.
I was looking at some of these Reddit videos. I'm like, shit, I'm nowhere near close to some of these guys turning 1,000 into 300,000, then down to 4,000.
Well, if you pull it off, I definitely want to watch it from a distance. All right, buddy.
But the bad thing is they won't show you their whole trading, what they're doing. I see their graphs, but I'm like, what are they doing?
Personally, I tried, what's it called? Where like chart reading, technical trading. I tried technical trading for probably 3 years. Mm-hmm. I couldn't really make it work reliably. I mean, there was times where, but I couldn't really say that I could replicable. You know how if you got a system, you could replicate your results.
Yeah.
And I couldn't see that I could do it consistently and replicate it the way that I can, I think, with, yeah. Mm-hmm. So
these are feeling trades. You're feeling it and you're just going with the gut. If it works, you hit it big. Otherwise, you just.
Right. And most of the time when I got a feeling in my gut, it's just indigestion or it's a bad, a bad food that I got. So I try, you know, hey, I see you got a haircut.
Yeah, finally I went to the.
And it looks like you didn't do it yourself, man.
This is actually 3 weeks ago. You should have seen me when I first had it. It was
okay. Well, you're the man of many haircuts. I used to call you Mullet Mo. You remember those days? I was like the only person in the world that called you that. All right, well, buddy, I'm glad to have you in the contest. I'm excited about the possibilities. I had a Zoom call with Sean Lathan, you know, kind of getting him set up. Had another one with Alex. You don't know him, but kind of most of them are kind of brand new traders getting their feet wet. So feels good to kind of build some skills.
And he's not even playing this contest, I see.
He said he was, but now he's like went dark, and I can't even get him to answer the phone. So
yeah, I texted him. I got nothing back. I'm like, hey, side bit.
So I don't know. I'm a little worried about him.
And Quan only doing spread? Is that it?
Quan is only doing the buy one.
Is he doing just a call or is he doing just a spread? I thought he was doing
No,
just.
he's just doing the call one.
Hold on.
Quan doesn't want to learn too much. He's got a limit to his learning. Yeah, I don't know. I just went with what he said. I just didn't push back at all, but that's what he's got.
He is Grapehead, right?
No, that's Sean.
Oh,
That's not Sean Lathan. It's Sean Stevens, who I don't even think you've met, but he's one of my work colleagues.
so which one is Quan? Gumbo?
Gamble. And he named his portfolio "Get Some Mo Money" or something like that. So I think you're being
win more money. I missed that.
I think you're being targeted there. I think that's a personal shot across your bow. Maybe it's because you called him a weasel in the last tournament. That was some trigger words somehow.
No, I saved him as a weasel on my phone.
I saw that. So I think this falls into the talking smack category. So hopefully we'll have some more of that. But that's all I got today. You got any more questions? And I'm going to get back to it.
Yeah, I mean, I probably will sit another day and actually see you in action.
Perfect. And the next time to do that would be Wednesday. So I put these trades on every Monday, Wednesday, and Friday.
Mm-hmm.
So, okay. Small accounts, you just trade one contract. Bigger accounts, you could trade 10 on each side. Just kind of depends upon your buying power.
I did I was worried about the spread contest, but I'm feeling better now.
You're in first place, bro.
Huh?
You're in first place, bro. Looks like you're trading some.
Did you see my trade though?
You're trading looks like some bullish spreads. Yeah.
It's like almost naked calls.
You figured out a way. So see, there is a way to gamble in that contest too. If there's a way to gamble, you're going to find it.
Yep.
All right. Why am I not surprised? Well, I do say we wanted to put in a trading cost that we believed was realistic. Sorry, it doesn't fulfill your
No, I like it. I like it.
Okay.
It's
not as bad as your Fidelity. I want to say that. Remember what those guys would gouge you on?
Oh my God.
They're trying to gamble it up in your IRA in Fidelity. I remember that. I was like, oh my God. They're probably still talking about you. They're like, hey, have you heard about this guy? Let me show you what he was doing in his IRA. They'd be like, are you crazy? You can't beat that rake.
Well, there's going to be round 2 and 3 coming, so.
Yeah. All right, man. It's fun as always.
3M earning. What are you planning to do on that?
I tell you, my favorite trade around earnings is always selling that 10 Delta strangle. I go wider around earnings just because there's so much risk. I think you probably saw I got hurt on Intel. When it goes down 14%, I can't fade that. So luckily I traded it small enough that I could take assignment. So I'm actually taking the stock on Intel and turning around and selling calls on it.
But 3M, I don't know. It might go over 10% in either direction. That's the problem.
I'll tell you.
Because of the mass situation.
When do they do earnings?
Tonight.
After market close.
Mm-hmm.
All right. So I'm going to look at, let me just share my screen with you since you're talking about it. Let's look at it together. I trade the weeklies closest to expiration.
Mm-hmm.
So the expected move on 3M is plus or minus $46. No, plus or minus.
Where did you see the expected move?
Okay, upper right. I'm looking on the option chain. It's plus or minus almost $7.
I'm still not seeing that. Can you point to your mouse?
Can you see my mouse?
Yeah. Oh, okay. Yeah.
Okay.
Yeah. Plus or minus.
Plus or minus almost, it's 6.957. So essentially it's $7. So it's expected to move 46% one way or the other on earnings.
So that 10 delta is not good.
Well, let's see. Let's look at the 12 delta, and well, it's 152.50. And let me go down to the 12 delta call is 172.50. So let me pull out my calculator, and we'll take 162.32. And first I'm going to add 7 to it. That's 169.32 on the upper end. That's within my limits on the call. Let me take 162.30 and subtract 7, and it's 155.30. So that's still, so it's within. I'm selling outside the expected range. Now, having said that, I would hate to go 10 contracts because I couldn't afford, taking possession at $172,000. So I'd probably trade it small, 3 or 4 contracts depending upon your account size. Now let me click on analyze this trade, and I'm going to drag these guys over just to show you that, the probability of profits around 90%, and you can collect $300 on here. But like anything, if it goes against you, like Intel, it can wipe out, 4 wins. It could knock out 4 wins for one big loss. So it's not without risk.
3 contract, what was the price he gave? Oh, 7,000.
$1. So I collect $300.
But you are required is 7,200, right? Margin.
Let's see what it takes about $7,000 in buying power. But you got a 90% probability of profit.
Yeah, that is a very high probability.
Yeah.
So I got a question. Why don't you just do that like every day on every single earnings you got?
Well, not all earnings have good liquidity.
Yes. I'm talking about like the big names.
I usually do. I like to, and 3M has decent liquidity, so I'll probably put on some. Now I can't put these on in my IRA, so I put iron condors in my IRA. So you basically buy the best 2 or 3 5-cent wings, just so it's legal in your IRA.
I'm trying to, put together like a portfolio of trades. So I can do that at everyday closing. And throughout the day, I can do the SPX trade, keep me busy. And
you mean in your real account?
Yes.
Okay, yeah. Yeah, I like it. Now, some people claim that earnings trades are kind of a 50-50 shot.
Mm-hmm.
I won't say that they're the most, last week I've had nearly all wins but 1 loss. Intel wiped out all the other wins, which made it kind of a scratch. So long term, I still like earnings trades, but you got to also deal with some of those frustrations for when one goes really bad. I've gotten hurt in the past on Tesla. I've gotten hurt on NVIDIA. I got hurt on Intel. Some people are kind of superstitious and they'll go, I'm never touching that again. But truthfully, I don't think the past has much memory.
Yeah. So the 3M, it showed 7,200 risking for 300 profit.
That's buying power, but that doesn't mean that that's what it's costing you. Buying power is kind of like what the broker is holding to manage their risk.
Yeah.
So it's not necessarily actual assets. It's just kind of what they freeze up temporarily to control their risk.
So if I'm like, let's say on that 3M, instead of 10% going up, it went up 15%, let's say. So I would be losing some money there. It's outside of our spectrum.
Let's go back and look at the Analyze tab. So I'll go and I'll click on Analyze. So what you can do here is you can play around with it on your pricing. So this is what it's currently trading at, 162.30. You start losing money at 173.53, and if it goes below 151.59. That's
so
when
if it's at 180, how much am I losing? Let's just say.
If it is at 180 on this trade, at expiration, you'd lose 1,800.
So about 8 times what I'm collecting.
We collected 300, and so if you'd lost a total of almost 2,000, yeah, it's like 7 times.
Yeah, so I mean that's not too bad. I mean, 90% of the time you're gonna win. So
yeah, I'll be honest. Let's see. Here's an account. I'll just show you. Kind of Intel. Down 5,700, but I was trading 10 contracts of it. But it's an account that's big enough that I could take it, and I did. I took possession of 1,000 shares of Intel, and I'm selling slightly out of the money call on it just for next month. If it goes up and gets taken away from me, doesn't hurt my feelings, but it kind of helps lower that loss from 5,100 to 3,000.
Yeah.
So it's kind of called the wheel strategy. Or a form of the wheel strategy.
Okay, I'm gonna try that today on earnings.
The 3M. I like it. I might actually put it on in some real accounts. We've still got an hour and a half before market closes.
But I think there's a couple of good ones tomorrow morning.
Okay.
So probably gonna put some of those too.
Nice. My only advice is trade them small enough so that if it goes against you, you can take the blow.
Yeah.
But it's your dough, bro.
No, I was actually talking about the play money account.
Oh, play money account, sure.
I need to like get the grips. I guess I should have actually done play money before actually doing with real.
Yeah.
Get my strategies better.
I'd love it if you would put things into groups so you can kind of go back and see how every category did just for learning purposes. So you could graph it, so you kind of get an idea. I mean, 30 days isn't enough to really get some good hard data, but I think it gives you at least a snapshot, right, of how you did on all your earnings trades. Now,
I'm also thinking about doing a play money account on the trade TD Ameritrade. Actually do it with the graphing and stuff.
Yeah. I've thought about that too, just so I could get an idea of what my beta weighted deltas are. And I don't know, you probably don't use that, but I'm always using beta weighted deltas to help me assess market risk that I'm taking.
Yeah, I mean, I didn't even know something like that existed, where you would just one click and, on the graph, you would just do the trade for you.
Yeah.
You can do actually the options, you can put 10 options at a time, and every time you click it, it'll just keep buying.
Right. Yeah, it's two-edged sword, right? It's good. It also increases the probability of a fat-fingered mistake.
Yeah.
So good and bad. there's a Chinese word for crisis that's a symbol that means danger and opportunity. And I think that both of those will be going on simultaneously with the.
Like, especially if you do day trading, there's been like so many occasions I looked at and I'm like, I see the trend is going down, but by the time I'm clicking and trying to get a position in, it's already like, decreased by 30 or 40%.
Yeah.
Especially like how SPA, SPY
Right.
and Apple moves, those
Yeah.
moves are.
Well, I'm anxious to hear kind of what you're learning about day trading, and maybe share your insights on trade diff, and let's all learn from each other.
Yeah, sounds
All
good.
right, buddy.
All right, thank you,
All right.
Dale.
Thank you, buddy. Bye.